growth. The net overseas migration has been quite high over the last post-COVID, and for obvious reasons, we had the border shut for a while, and when the border opened, we had a tsunami effect. So very big intakes in 2 years in a row. But still, the numbers are still quite high, and we need that. We need migration to make sure that we have GDP growth, to make sure that we fix our labor shortage issues, and to make sure that we have enough young people coming in the country and paying taxes so we can fund our retirees. We have 300,000 people going on a pension every year. Without migration, you cannot solve that equation. And then you can see up here some of the things that actually, have helped the migration in terms of the key cities, certainly, but it's every city in Australia, plus some of the growth regional areas where people are going. So you have seen recently the price of homes in Brisbane have hit $1 million for the first time. I remember when Sydney hit $1 million for the first time. And now you've got Perth at about 930,000 for average house, and by the end of this year they will be at $1 million. Melbourne's lagged a little bit, but they're around there as well. Okay, so there's a lot more cities. Adelaide, I think you will find soon will get there as well. So in a few years' time, there will every city in Sydney will have average prices of $1 million plus, and Sydney will probably likely hit 2 million as an average price. But you've got significant interest obviously from migration side, plus also you've got at the high end of the property market, you've got significant interest there from places like China and Japan, even the US now, given the geopolitical situation there is a lot more people, believe me, that are looking at purchasing property in Australia and indeed are moving to places like Southeast Queensland. Okay, on the supply side, there are a number of constraints. And again, I won't go through all of them, but the key thing here is that you've got issues with labor constraints, you've got issues with supply of material constraints, the price of materials has gone up, we have lack of developable land, and lack of supply of sewerage and water, which is a key issue in places like Sydney, and they can't build that type of infrastructure quick enough. And last but not least, fewer building companies in the market. We have not seen as many failures with builders that we've seen in the last 3 years, probably in the last 30 years. So it's been a period where a lot of builders have had fixed prices. They did not watch their cash flows properly, and they've had significant issues trying to manage and survive. So that's been an issue, not just in Sydney, but all over Australia. And I think one of the states that is having one of the biggest issues is Western Australia. So on the backdrop of the fact that we have got, the government is trying to fix supply issues, we have got all of these constraints that they're going to have to deal with as well. And trust me, I deal with developers every single day, and this is a major, major issue. This is another issue, is we're not building enough. Okay, the building approvals and completions, on the approvals, it's getting a little bit better, but we need significantly more than this to solve the deficit that we have. The dwellings completed, you can see on the right side there again. When you need more dwellings, the numbers have actually been coming down. Okay, so demand is increasing and supply is actually dwindling. A few quick observations here on property. So supply will, I think, lag demand significantly, and the equation won't be solved in the next 5 years. You can see the numbers there of the deficit we have to catch up on. Rental crisis certainly is there, and it'll probably, in my view, worsen even further. And increased cost of construction means that the builders, developers, they are going to be, looking where they can actually make money with the increased cost. So in Sydney, I know, a lot of apartment builders, because apartment costs to build a two-bedroom apartment now is somewhere between 400 and 450 per apartment, when it used to be around 250 pre-COVID. So you have to build in a suburb where you're going to be able to sell the apartment. So they're becoming more selective as well. Here's the rental vacancies. So you can see the vacancy rate of 1.3% nationally. That is very, very low. Even at 1.5%, at 1.4%, I should say, in Sydney, we are finding that rentals are still increasing. So it's a chronic situation. A healthy vacancy rate, just so you're aware, is anywhere between 2.5 to 3%. So at 1.2% nationally, and you can see Perth and Adelaide, they're at very, very, very low rates. It's always an equation that you cannot fix, an issue that you cannot fix overnight. You just need a lot more properties because demand is not stopping. Okay. I talked about GDP growth. Well, if you look at the quarters here, we are barely above. Okay, we are barely above. But if you look on the right side here, we have had the infrastructure. We have had infrastructure in education, in defense, and those things, and migration, of course, which has managed to actually keep us a little bit above water. There's nothing to write home about. And Reserve Bank knows that very, very clearly, that GDP, last point here, per capita has gone negative again. So at our homes, in your households, we are all feeling a little bit poorer. That's what a negative GDP in your home is. So if you take all your income in your home, minus all your expenses, including your mortgage that you are paying or your rent, then you feel a little bit poorer now than perhaps you felt a year ago or 2 years ago. Okay, and that's what negative GDP per quarter actually means. So we need stronger GDP growth, and we are barely there. If the government stops on the infrastructure spend, or indeed puts a bit of a cap on the migration, we will definitely come into a recession, because those two factors are more importantly keeping the economy going. Our inflation is now well controlled. This figure is a little bit better now. We're at 2.4 in 2.1 in the underlying inflation and 2.4 in what's called the trimmed mean. So it's not a bad place for us to be. We're within the target band of where the RBA wants us to be, which is between 2 and 3%. But the RBA, as I said earlier, wants to make sure that we keep these figures within the band. As soon as we're out of the band, you can be assured that interest rate drops may pause for much longer. Okay. Now the RBA's cash rate target. We are also in a good place now. We're in an easing cycle. You can see if you go back to 1990, yes, the interest rates were this high. I paid 17% for my first mortgage. And there's been a big fall here, increase here, another second fall here, third fall, fourth fall, a big fall here, fifth, and then the sixth one happening here. So there hasn't been too many easing cycles in this very long period. Okay. Now, what I will say is that when the tightening cycles happened here, all of the tightening cycles, I can tell you, and I've been here for 43 years, that not a single time in any of these tightening cycles did property prices actually go up. Sorry, did property prices fall, I should say. And in each of the times that there has been an easing cycle, okay, we are into one now. Each of the times we've had an easing cycle, house prices have actually gone up. And at the moment, and we'll see something in a minute, but in the important thing with this easing cycle is that the rates were not very high, even though the people who are new to the property market call 6% as a high rate for mortgages. You can see from this graph that this is the average, and we didn't come to the average. It's just this increase has been very quick. So the key here is that in an easing cycle, particularly with the backdrop now of the supply and demand in equation, you are probably going to see higher increases in property prices. Here's the unemployment. Interesting thing about unemployment is pre-COVID, all of these, unemployment was above 5%. And then, of course, it spiked during COVID. Then it's been coming down, and we are struggling to go above 4.1. So I think the RBA expected that we probably will be a little bit worse than this. And this is one of the reasons why they haven't, reduced interest rates as often or as quickly. They will probably watch this figure because with the unemployment rate where it is, we're in a pretty healthy economy. So the economy has actually been quite resilient. We're still employing people. We haven't laid off many staff, even though the GDP has been reasonably flat. Okay? Here's what the big banks are thinking about how many cuts we're going to have this year. So next cut forecast, everybody's at August. They were all obviously predicting that it was going to be July. Didn't happen. And then the most bullish one here is NAD. They were thinking there's going to be quite a few cuts. But my personal view is that we will probably see at least 3 more cuts this year. And I think August is more and more likely. Why is now a good time to buy? Well, this is the point I was making earlier. So you can see here, each time that we had a easing cycle, which we are into now with interest rates, you have had significant increases in property prices 2 years after the cycle starts. Okay, within the 2-year period after our cutting cycle starts. For our cutting cycle actually started in February. That was the first one. And likely you're going to see between now and maybe third quarter next year, this will be a slightly longer cutting cycle because it might pause and then cut, pause and then cut. But if you have 3 or 4 or 5 cuts, you're going to be somewhere around that 3 and sub 3%. We're at 3.85 now. So if it gets to the, cash rates in the high 2s, you definitely are going to see increases in property prices. So these were the different times. And of course, there are a number of other factors that you've got to consider. But I personally think with the backdrop of a low supply, high demand equation not changing over the next 3 or 4 years, with rate cuts, it's a catalyst that is going to actually push house prices up. This is where the 2025 price forecasts are for the major banks, and also put in KPMG's there as well. They're not as bullish as I am. If based on 3 to 4 cuts in 2025, I think you're going to see particularly in the third and fourth quarters, where with that quarter now, you could see as high as 8 to 12% this year. Okay. nobody gives you a warning that prices are going to go up. But you can see, you can, and you have seen in the past, in 2021, you have all seen that property prices can jump 3 to 4% in 1 month. Okay, so I think these banks have had their fingers burned in the past and overshot on what cuts we were going to see after COVID, and now they're being a little bit cautious. I seriously feel with the backdrop of the supply demand that another two cuts you're going to see, another two cuts. So say one happens in August and one happens in October, you are going to see a FOMO effect, and that's going to actually push prices up a lot more than people think. Very quickly on global factors, because we can't avoid global factors. Interest rates, by the way, can be cut without giving any consideration to local economic factors, based on significant things that could happen globally that could have a direct or indirect impact on our economy. Okay, forward-looking things. So the tariffs are a good example of that, and we'll talk a little bit about that because we can't avoid it at the moment. It's in the news every day. So the key issue in the US is the national debt. The national debt is at 36.7 trillion, which on a per capita basis of a population of about 330 million is significantly higher. Per person debt there is significantly higher than what we have in Australia, even though we worry about our debt. The national debt has grown by 16.79 trillion, I should say, in the last decade. Anyway, the key here is that Trump's solution to fixing this is, as you would do in your own household, if you could not pay your mortgage, what do? You cut costs and you raise revenue. You get a second job and you tighten your belt. This is exactly what he's trying to do. He's got cutting costs, mostly in the government space. Target is to cut 1 trillion in 1 year and raise revenue through tariffs. Time will tell whether this will succeed. I am very skeptical about it, to be honest. And I think he's finding the difficulties already trying to deal with some of the larger major economies like India and China. But should we be worried? Now, if you look at our exports, I think we all know our biggest export is to China. They make up 36.7% of our total exports. Second is Japan. Most of you probably did not realize second is Japan, but it is. Third is South Korea. Fourth is India. The United States comes fifth, and they're only 4.1% of our exports. So even if there is a tariff on 4.1% of our exports, I don't think we need to be all that worried. What we should be worried about is what is happening with China, Japan, and India, because they are our bigger trading partners. Okay, that is key. So the knock-on effects of the tariffs on these countries could be a negative for us. However, it could also be a positive for us. I think the media will only focus on the negatives, but there is a high likelihood, pretty high likelihood, in my personal view, that there could be, today is probably not the day to debate that and talk about, but there could be some very positive knock-on, because some of these others are going to look for other markets. If their exports to America gets too high, and indeed if America rejects some of their exports, we could see cheaper goods coming into Australia, and that might help our construction industry and other industries as well. But we will wait and see how all of this plays out over the next 12 to 18 months. So my personal view on the Australian impact is there is reasons for optimism. Firstly, I think inflation has rolled over. Okay. And if there's one good thing Trump has done, he's helped our inflation a little bit by bringing petrol prices down. Oil prices have come down. Interest rates are obviously in an easing cycle. If there is a recession in the US, which we are all worried about, it probably will be a soft landing, in my personal view. GDP is picking up again, and unemployment remains low. That's good for our economy. And some of the Labour government policies are actually positive for property prices. So, in my view, I have these 5 reasons why I'm certainly optimistic, and hopefully some of you will share those views as well. These are some of the Labour housing policies. Some help supply, some help demand. But the key one there is, they have some pretty big things which help demand. One is this 5% deposit scheme. Okay. Then you've got the expansion of the existing programs, and so on. These are actually, some of these, as I said, help demand and some help supply. The government is throwing everything at it to fix this inequation. But as we all know, you need homes built and built quickly, and for that you need land. So the prices are still creeping up every day. I mean, we have been selling interstate, and I can tell you that prices have skyrocketed in a lot of the cities like Brisbane, Perth, and Adelaide, and it's not stopping anytime soon. Concluding comments. As a buy, I say this every time I talk about property. If you want to accumulate wealth in Australia, you have got to buy property, and you've got to buy them at the right price at the right time. Okay, it's not just about location; it's about the right price and the right time. You've got to buy in areas where there is population growth, where there are good differentiating factors, and location is always important. Where there is supply and demand shortage or inequation, and where there is rental demand and a shortage of properties, these are the things that we focus on. Now, I will hand over. We will take questions at the end, or you can put them in the chat. We will hand over to Afi now from Bramwell Homes, who will talk about 2 regional areas which we are very excited about. We very rarely actually promote regional areas, but having done our own research on this particular area, we have found that there is a huge opportunity. It's very difficult actually to look for places in Australia where you can still get bargains. And we, this area actually ticked all our boxes in terms of an area of growth. And I also say to people that if I, when we looked at, and Kris will tell you that when we looked at Adelaide 5 years ago, and then we looked at Perth 3 years ago, and Brisbane we have been doing for the last 6-7 years. All those places we had told people that, I mean, Brisbane's a good example where we told people that, we were selling dual keys at 480, and the prices today are in the 900s. And that story is also there in Adelaide and in Perth. So if I asked anybody listening to me today that would you buy a property at prices 3 years ago or 5 years ago, you'd say that's a silly question. Well, I'd be saying the same to you. In 3 years' time, you got to look at property as something that it's not the stock market. You've got to be holding for at least 3 to 5 years, and longer, to be honest, to get value out of it. And this is a great opportunity. So I'll hand over. I'll sign out. I'll stop sharing this one and.
Perfect.
Okay. And I will get Effie to sign in.
Hi, Effie.
Hello, everyone. Can you?
Yep. Got you.
Yep, perfect. Can see you.
Yeah, we can see everyone. Hello, everyone. Thank you, Shashkin. My name is Effie, and together with Trish tonight, we are representing Bramwell Homes. We're going to talk to you a little bit about Bramwell and who we are. Bramwell Homes, we are a head office here in Sydney. We operate from Thornley. We've been in the same office for something like nearly 30 years now. We are a regional builder. We have built throughout Australia. We've built in Queensland, of course. We build in Victoria. We build in South Australia. And we are at the moment, and we have built here in New South Wales. We've built in Wagga. We've built in Newcastle. We've built in Cessnock. We've done all the areas. The reason we are in Armidale and Tamworth right now is because of price. Now, the prices that I'm going to go through with you later on and show you what we build. We do adjoined livings, and we also do normal 3-4 bedroom homes. And of course, we do our duplexes, and I'll go through them and show you our designs. Why Armidale and Tamworth? That's something that I'm going to show you. And let's go and see Tamworth first, and why are we looking at Tamworth? I don't know how many of you know where Tamworth is. Basically, where Tamworth is itself. I just got a location map here just to show you. There it is there, and as we can see from here, Tamworth is right there. Newcastle, we probably all know about Newcastle, and we've got Sydney just here. From Sydney or from Newcastle, it's about 3.5 hours. Armidale's just a little bit there, which is an hour away again, so that gives you an idea of where it is. Now we look at why at Tamworth, what's happening in a place like Tamworth. Well, we've got one of the biggest regional hospitals, and this is what the hospital there specializes in. We even have a cancer center, which is not many regional areas don't have the cancer center, as we call it. The patient care, the screen user will tell you whatever I can't tell you in such a short time, and we are very happy to share all this information with you so you can have a look at it. We've got agriculture, and that's where, again, it tells you here on all about it. We've got the beef, we've got the sheep, we've got the grain, we've got poultry, we've got lucerne, we've got dairy products, we've got livestock. Unfortunately, again, we've got one of the biggest slaughtering livestock, I suppose, if we want to put it that way, in the country. Again, there's our agriculture, there's our manufacturing, we've got our health, we've got our tourism. And again, I'm happy to share all this information with you, and you can look at it for yourself. Our manufacturing, for example, is thriving. We've got fruit processing, we've got textiles, machinery production, our healthcare. Again, one of our biggest employer is the hospital there, and all about medical. Again, probably a lot of you would know Tamworth of the Country and Western Festival, but that's not all. That's only just a little bit part of it. Some of our projects there, we've got, as you can see them here, what we have, we've got a lot of our construction workers, we've got our battery storage facilities, our solar panels, our wind things, our wild farms, and so on. We go our yields, and this is a little bit about our growth, what's happening there. Again, I'm happy to share this with you, the strong demand of the land and the falling of the vacancy rates and the high rental yields, and I will show you some of the properties and what we are achieving rents for them. And that's a little bit about this one. We might go straight on to Armidale and see some facts about Armidale. Armidale again is a little bit different, and Armidale is all about education and about our university there. Again, not all about that. Again, something I bet that you all did know, the capital, the tomato capital of Australia. We've got the New England University. Again, we have solar panels, the University of the Agriculture, and of course we have retail as well. Population, our population there is about 29,000 people. Our local jobs there, it shows you there. Again, shows you all the employment residents and so on. I talk about our agriculture again, and our tourism and our public sector and our education. And again, if I go through all this with you now, we'll be here all night. Again, a little story about the New England University. It is one of the eldest universities here in Australia. Again, we do have another hospital in Armidale. Again, a very big hospital that supports the Tamworth Hospital and also the New England Medical Facility. Again, solar panels, manufacturing, production. Strong sector. Again, I'm happy to share all this with you. And there's our Armidale houses. Where is Gara? Gara is just a little town about 30 kilometres out of Armidale. We just threw that one in there for some people to see. Armidale is the university town. It's got the high yields, rental yields, and so on. It's just another little brochure there about Armidale itself. But what I might do, I might move into the most exciting part of the evening and just show you of what we build. I'd like to show you our dual living designs first to see what they look like. This is one that on the screen there, that's a 4+2. And this is our Albany, and this is what it looks like. There is our floor plan, and we have our 4 bedrooms there. We have another master bedroom there with an ensuite and a garage. And then we have our second dwelling, which is 2 bedrooms with a garage. And basically that is called our Albany. That's probably one of our top range dual living and probably one of our most expensive ones. And it looks something like this. Then we move into something a little bit different, which is our Alice. Very, very good design, a little bit smaller. This is a very, very good seller. Only 3 bedrooms with an ensuite. And in the second dwelling, it's 2 bedrooms with a double garage. So you've got 1 garage in each one of them. Very, very popular design, very affordable. And again, both a good seller and also a good renter. You might just want something a little bit more simple. Not everybody does want to rent a 3-bedroom or a 4-bedroom and pay the 3-4 bedroom rental. Therefore, you've got a 2-bedder. This is our Nandam. And this one has got 2 bedrooms on each side with a lock-up garage. Then we have our Roseville, very similar to the Alice, but this one does not have an ensuite. And that one actually is not a garage. It is a carport. Then something different, a little bit different, not as expensive. These ones, as you can see, do look a little bit cheaper. They don't have garages. We've made them with carports, but that doesn't mean that you can't have the garage built in. Of course, at an extra cost, and the carports do become garages. This is a 4-bedroom, and of course, a 3-bedroom on one side. They are actually cheaper than the other one that I showed you, was the Alice, because of the way that it's constructed. At Belmont, very, very popular designed. Again, because it's a 3 bedrooms on each side, it attracts people that may have 1 child, a business couple, so they will use the main bedroom for themselves, the second bedroom for the child, and they might use the third one as a study. Or very popular in Tamworth, this one, a lot of our nurses might rent it being close to the hospital or anywhere in the area there where they can share the accommodation there. A different design again. We did a lot of this here in Sydney. For some reason, they were a lot more popular here. People seem to want them. It's a little bit more like a granny flat, a house with a granny flat. So you've got the 2 bedrooms at the front and the 2 bedrooms at the back with a double garage. And this one, again, very popular, nice design. It looks lovely. Our Grafton, that's the Grafton there. Then we move into the Harrington. Again, a design a bit like the other one that I showed you. 3 bedrooms there with the living area. Every one of them comes with a separate meter, of course, and a separate water and everything else. One of our most popular ones at the moment is the Kingsley. The reason why this one is so popular, it is 3 bedrooms and each one of them has got an ensuite. Therefore, you've got your 3 bedrooms. Again, this one might go to a young business couple or an older couple or someone with maybe 2 children, but it does have the two bathrooms in each of the dwelling. Very, very popular and very well priced as well. It does have a carport. You can have the carport made into a garage. You can also have another carport added, whether it's here or whether, depending on how the block is shaped, where you can have that on set on the block. Ashmont, again, similar to that one. This one has got, again, en suites on both sides. The Azalea, different designed again. This one is placed this way, where this one is similar to the other ones. You've got an entry here and also an entry here. How do we, from that, we move on to the ivy, similar again to the other one there, and the willow, again, the same similar design. But we'll move on to our duplexes now, just to show you something different. Now, these are 2 titles. You will get, I suppose on completion, yes, you will get your 2 titles there. I'll show you what they do look like inside. This is the Rosella. The Rosella is one of our 2-bedders. You've got 2 bedrooms on each side. And as we said, not everybody wants to build 3 bedrooms on each side. There are people, and it's all about money as well. So this is 2 bedrooms only. The Acacia, a very good design. 3 bedrooms on this one. There. The Banksia, another great design. The Banksia is interesting. This one is a 4-bedder, and it also has the ensuite. So great design, great seller, and very well priced. One of our biggest seller at the moment. The Avalon is interesting. This one is built especially for a corner block. As you can see, you've got 2 entries. So you've got an entry on this side, and you also have an entry on this side. So you can enter from one street or the other. So that's a little bit. And one of our most popular ones, again, this is the Waitara. The Waitara is a little bit bigger. It is probably one of our most expensive ones. And it does have 3 bedrooms with an ensuite and the living area and all the extras that you need. It's got a lovely living area here as well, and your 3 bedrooms. So that's a little bit. We do have a lot more designs, but that's all I've sort of managed to show you today. But I'll take you back and show you what we do have now. Something wonderful just to show you of what the prices are and where you are. Something like this, a Belmont 131, for example. There it is there. You probably just want to see the design. Something like this we have for sale right now in one of our estates, in a Trafalgar estate, and I'll show you where it is and how it is. This one here, the whole price of the property is $644,000. That is house and land. The land there is 600 square meters. The land price is $167,000 and the total price is $644,000. But the rent that you will get on that will be $860 per week. Now, a lot of people say that is a lot of money, $860 for a house in Tamworth. What you've got to remember is that you are not renting one house. You are renting 2 houses. You're getting rent from one dwelling and you're getting rent from this one as well. So you're only looking at about $430 from each side, which that's why you come up with something as high as $860 rent. So it's not just one home, it's 2 homes you're getting an income from. Every house has its own water meter, its own power meter, so they are separate. They're totally separate. Again, you only have 1 carport with this one, but there's no reason why you can't have a second carport or you can't have a garage, and you can have it, depends on how the block is shaped. You might be able to have your garage here if it's wide enough. You might have it here. You might have it on the side. Just depends on the shape of the land. But one of our most exciting projects here, we have a beautiful block of land in North Tamworth. Now, North Tamworth, if you don't know Tamworth, is like our Sydney North Shore. That's the best way to describe it. The best part of Tamworth is North Tamworth. As you can see, this estate here is a beautiful corner block surrounded by beautiful brand new homes. So right there, we can have an Avalon put on this side because it is a corner block coming from each side of the thing. And I will show you the prices and what we are actually putting there. You have a look at our this particular here. And there's the address there. You are welcome to look at it if you want yourself. We don't own the land. So basically it is what it is. It is the price of it. The whole total price is $875,000. Now your rent on this one here, it is 1,110 because you are renting two houses. And this is the design of it. It is one of our smaller ones. It is the 2-bedroom ones that I said to you earlier. It is North Tamworth. Again, it's a little bit like our Sydney North Shore. That is the suburb. Show you what else you can put on that particular block. You can have a Banksia, which again, I said to you, it's one of our very popular. There. It's a 4-bedroom. So you've got your garage, the garage again, you've got your master bedroom with your ensuite twice, and that's the design of the house there. The total price for this one is $1,028. Your rent here is about $110 as well. And let's see what else we've got. And we have got another design as well. The Acacia. This would be a 3+3. It is a 3-bedroom. There it is there. And that's what it would look like. We do have quite a bit of things available. I'll just show you something basically just to show you what we have. I don't mind sharing this with you. These are some of our properties that we have listed at the moment. Armidale, the land price there is $245,000. We're looking to build a house and land package there for $765,000. You're getting a beautiful design, which is the azalea. Your rent there is $900 per week. So you're buying a lovely dual living. That is a dual living, not a duplex. $765,000 with $900 a week rent. Again, Armidale, a bigger block, but look at the size of it, 1,498. It's going to cost you $814,000 total build with $930 rent. Armidale again, all this, as you can see, the price of the land does vary, depends of where it is and how big it is. Another good one there, $850 for a total build with $930 rent. Moving down to Tamworth, we've got Tamworth Peppercrest Crescent, again, beautiful area in Moore Creek. The land there is $249. Look at the size of the land, 1,772. We are building a Rosella there, and that is going to be $879,000, but you are getting $1,100 a week rent. Kalala, another beautiful part of Tamworth, a little bit like the Sydney North Shore again. Beautiful area, $260 for the land, $250 for the land. Again, North Tamworth, $245, $240, $240. That's what you will pay now for land in Tamworth. Again, we've got something else in Tamworth, which is Westdale. The land in Westdale is a little bit cheaper, $245,000 there, but you are still getting a beautiful product for $755, for example, with $830 a week rent. The one that I did show you earlier, which was cheap or cheaper than the others, would be in our Trafalgar estate, which is this one here. And it is lot It is this particular block right there. The whole estate is sold out now. There it is there, and it's something that's come back onto the market. The estate is almost registered, not quite there yet. We're probably maybe a month or a month and a half away of registration, maybe not even that much. And everything has been sold. We might have some fallovers come back on the market, but at the moment what we have is 309, that one there, and that was the one that I showed you, the total price, which was this house here. Right there. And there's all the details there. 600 square meters block of land. The rent there would be about $860 per week, and the whole package is $644. And there's the plan of the house. I think that's about all I've got to show you.
Thank you, Effie.
I can hand you back to Kris now. If you need any more details or whatever, you can reach out to Nivas Real Estate. We can arrange, if you want to have a look at our products, to talk with, do a Zoom with you or come into our office, or I'm sure that Kris and everyone else will look after you. I hope you had a lovely night, and thank you again. And let us know if you need anything else.
Thank you, Effie. Very much appreciated.
Thanks, Effie.
And thank you, Sachin. Thank you both for tonight. We hope you got some good insights out of that. What we will do is we will be hosting some questions for, if you've got any questions on the market, please feel free to answer. If there's anything regarding Armidale, Tamworth, Bramwell Homes, that sort of thing, because there are different buyers, different requirements and so forth, we'd prefer to do that on a one-on-one basis. So I've put my number and Raj's number in the messages for you. So all you need to do is just take a screenshot of that, give either of us a call or message. We can arrange a chat with Effie and we can go through the packages, the area, whatever you want in more detail. But as mentioned, if you have any questions about the market, or want to pick Sachin's brain about interest rates or inflation, anything, please feel free.
Guys, if
And
there's
of
any
course-
questions, please feel free to ask.
Yep, no such thing as a silly one, as we always say. So go for it. Okay, everyone's well versed on Armidale and Tamworth. All right. Well,
Anyone would like to break the ice?
yeah, please feel free to. No, all good. So guys, again, our number is in the chat. So just take a screenshot of that and we can go through this in more detail if you like. And I'll also send you all a recording as well.
Got a quick question.
Thank you. Thanks, guys.
I've got a quick question.
You got a question? Yeah.
Hey, go for it, Sachin.
How long does it take to get are these land all registered, and what's the lead time we're looking at to get a completed home?
Are you talking to me, Hashim?
Yes.
Yes.
Or the one that I showed you, the last little block that I showed you, we're only probably weeks away from registration. We're just waiting for some final stuff from the council. Yeah, but the whole estate is sold out. Like I said, that's the only one that we it's not unconditional. Now, I should rephrase that. There may be a couple of more that might come back that we're waiting, but we're not pushing it because the land is not registered. So people are trying hard to get the finance, so we're giving them the time.
Perfect. And build times in Perth and Armidale and Tamworth.
Build time is about 48 weeks. That's what it will be on the contract.
Amazing.
We can build earlier, but at the moment we'll stick to our 48 weeks, and that's what's on the contract.
Perfect. Perfect. And as Effie has mentioned as well, the rental vacancy rates are very low there. They're renting out very quickly, and the yields are strong and moving from strength to strength due to a lack of supply. So, yeah. And demand. Population is growing there significantly in both cities as well.
Well, we're happy to share all the graphs that I had there with
Fantastic.
anybody that's interested to have a look at them for themselves. So
Amazing.
everybody must be very clever tonight. No questions.
But yeah, look, ladies and gentlemen, if there is no more questions, yeah, again, take a screenshot of mine and Raj's number. Call us if you need anything, and we'll send you a copy of this Zoom post presentation.
Absolutely, guys. We kept it short and sweet today, but one-on-one Zoom sessions are available. So whenever, if you guys want to book in, and we'll go in much more detail. Obviously, there's only limited information that can be shared with so many, people joined in. Obviously, keeping in mind everyone's time. So one-on-one Zoom sessions, me and Kris are always jumping on with Effie with clients. So we are happy to, take any inquiries, or if you would like to jump on a one-on-one session, we're happy to accommodate that. So let us know.
Amazing. Okay. Well, if there's no other questions, I thank you all very much for your attendance. Thank you, Sachin and Effie, for your presentations, which were amazing. And I'm sure we'll be chatting in the next 24 hours with everyone else online.
Thanks, everyone.
Perfect.
Thank you, everyone. Have a good night.
Thank
Take
you.
care.
Have a good night, Effie. Thanks.
Yes.
Thanks,
Thanks.
team.
Bye.
Thank you.
Bye.
Bye.
Good night.